All right, today I want to dive into a topic that is making waves recently. It has to do with gold. And I don't know if you've caught the news recently, but gold is hitting all-time new price highs. And if you were to watch and go into the markets today, is sitting at right about $2,135 per ounce, which is breaking all previous records. So what's going on with that? Well, it's really a mix of lower interest rate expectations, a weak dollar, and some global jitters. I think that comes naturally with war. Now, I want to go over the benefit of having this information, but also why gold is such an important asset during inflation. But before I get into that, make sure that you take a moment to like and subscribe to stay informed on this topic. A simple click is really all it takes, guys, and it helps me a ton, and I really appreciate the support. Now, similar to gold, Bitcoin on the digital front is kind of the digital gold, as some call it, pioneering the cryptocurrency arena. Now, the coin itself has recently also started hitting new highs. Notably at $44,000 threshold, making a substantial milestone in its valuation. Now, this increase isn't just merely a fluctuation in numbers, it also represents a paradigm shift in the financial landscape. Now, Bitcoin's ascent is really a testament to the growing acceptance and integration of digital currencies in mainstream finance. And it really symbolizes this transformative era of monetary transactions, demonstrating that really digital currencies are evolving from this niche asset class into something that really is going to play long-term in the global financial arena. Now, in addition to Bitcoin's recent market performance, there's another significant development in the cryptocurrency sphere where BlackRock, a major player in the investment world, has received $100,000 in seed capital for its proposed Bitcoin traded ETF fund. And this is recently reported on CoinDesk. Now, this move is a clear indication of the growing institutional interest in Bitcoin and its potential as a mainstream investment vehicle. Now, the proposed iShares Bitcoin Trust by BlackRock aims to invest directly in Bitcoin rather than futures tied to the cryptocurrency. And this approach marks a significant shift towards the acceptance of Bitcoin in traditional investment portfolio. The fact that such a renowned investment firm is making strides into the Bitcoin ETF space suggests a maturing of the cryptocurrency market and a possible increase in accessibility for the broader range of investors. Now, this development, coupled with Bitcoin's price going up past the $44,000 mark, paints a picture that the digital asset has increasingly gained traction and legitimacy, not just in the US, but on a global scale. And it represents a transformative phase in the world of investments, where traditional and digital assets are beginning to intersect more prominently. So what are the differences? Well, Bitcoin is kind of the gold standard of the cryptocurrency world. It's often touted as the digital gold. So unlike gold, Bitcoin is purely a digital asset, offering a decentralized, borderless, and transparent approach to value storage and transaction. Its proponents argue that Bitcoin's limited supply, capped at 21 million coins, makes it an excellent hedge against inflation, much like gold. But Bitcoin, relatively its short history, marked by high volatility and regulatory uncertainties, definitely presents a stark contrast to gold's millennial-long status as a store of value. And the debate between gold and Bitcoin often boils down to a clash of investment philosophies. Now, gold's appeal lies in its physicalities and historical significance. It's a tangible asset that has been valued for centuries, offering a sense of security during times of economic turmoil. Now, central banks and investors alike have flocked to gold as a safe haven, especially in times of geopolitical strife and market instability. Now, Bitcoin, on the other hand, represents a very new era of investments. It's a bet on the potential future of finance, a digital asset that challenges traditional banking systems. Its supporters see it as a way to decentralize finance, offering a hedge against fiat currency devaluation and a means to transact freely across borders. But here's something to keep in mind about Bitcoin. Bitcoin, created in 2008 by an unknown individual or group under the alias Satoshi Nakamoto, is a peer-to-peer digital currency that operates on a decentralized network. This decentralization means there's no need for a central authority or centralized servers. And the ledger is distributed publicly, allowing anyone to be a Bitcoin miner, create a Bitcoin address, or conduct transactions without needing the approval of some centralized government or source. Privacy is another key aspect of Bitcoin. It's a synonymous currency, where funds are linked to Bitcoin addresses rather than real-world entities. While all transactions are public, the connection between an individual's identity and their Bitcoin address is not inherently obvious, offering a degree of privacy. The security of Bitcoin is underpinned by its proof-of-work algorithm, where miners validate transactions by solving complex problems, and the combined computational power of these miners, known as the hash rate, is a crucial metric for assessing network security. Now, a higher hash rate indicates greater difficulty for malicious agents to disrupt the network. Now, the risk profiles of gold versus Bitcoin are definitely marked differently. Gold price movements, while not immune to volatility, are generally much more stable than Bitcoin. And the cryptocurrency's price can swing wildly based on factors like regulatory news, technological developments, and market sentiment. And this volatility can be a double-edged sword. It presents opportunities for excessive high returns, but it also poses significant risks. The supply dynamics of both assets are also worth considering. Gold's supply increases slowly, as it must be mined and refined. Bitcoin's supply, meanwhile, is algorithmically controlled, with new coins being mined digitally and its total supply is capped. Now, this scarcity is a key selling point for Bitcoin enthusiasts. Both Bitcoin and gold shares are a trait of scarcity. While gold supply increases slowly through mining, Bitcoin's total supply is capped at 21 million coins, period. Now, this scarcity is similar to that of precious metal. It adds to Bitcoin's appeal as a store of value without the challenges of portability and durability associated with physical gold. Now, demand for both assets is influenced by a variety of factors. Gold's demand comes from its use in jewelry, technology, central banks. Bitcoin's demand is driven by investor interest, adoption as a payment method, maybe, and its growing acceptance as a legitimate financial asset. Now, looking ahead, the question isn't necessarily whether one will outperform the other, but rather how each can fit into a diversified investment portfolio. Now, gold's role as a safe haven and as a hedge against inflation is well established, while Bitcoin's potential as a digital store of value and its possible integration into the global financial system is increasingly going up. Now, Bitcoin faces several criticisms. Its value source is unclear, unlike stocks or gold, which have intrinsic value from a physical utility or underlying asset. Bitcoin's value relies heavily on market demand, including the continued belief in its value and need, as it lacks many use cases, making it volatile and potentially risky. Critics, in fact, argue that its value is based more on speculative investment than it is on its utility as a currency, which at the moment I think is very valid. And in contrast, gold has a well-established value derived from its physical properties and historical significance. It's a tangible asset with utility in various industries, and its value is less susceptible to the whims of the market demand. Now, gold's stability and recognition as a safe haven asset makes it a preferred choice for investors seeking a hedge against economic uncertainty. Bitcoin's volatility is a legitimate concern. While it may offer opportunities for traders, it's less appealing as a stable store of value compared to gold. Now, the complexity of Bitcoin's technology and its decentralized nature, while innovative, adds layers of uncertainty for the average investor. In comparison, gold's straightforwardness and tangible nature provides a sense of security and ease of understanding. As investors navigate these turbulent economic times, the choice between gold and Bitcoin may come down to personal investment goals, risk tolerances, and the belief that you have about its future ability to perform. Now, while gold has hit recent highs, reflecting traditional investment sentiment, Bitcoin continues to challenge the norms, offering a glimpse into the potential of the digital financial future. Both assets, with their unique attributes and roles, present compelling cases for inclusion in a modern investment portfolio. So what's the verdict? Well, it's not a one-size-fits-all, that's for sure. Bitcoin is a bold move. It's for the adventurers, the digital pioneers. It's a glimpse into what money could like into the future, but it's not without risks and complexities. Gold, though, it's tried and true. It's for those who like a bit of tradition with their investments, a touch of tangibility, and probably a lot less drama. So that kind of wraps up our gold versus Bitcoin analysis. Obviously, thanks for watching. If you gained value from this analysis, please hit that like and subscribe button. And until next time, stay informed, navigate these shifting financial tides with confidence.